The President of the United States just backed cryptocurrency, and while everyone is debating politics, smart investors are quietly positioning themselves for massive gains. Today we'll go through the exact buy signals for Bitcoin, Solana, and XRP that 99% of investors will completely miss. Patterns that could lead to life-changing profits if history repeats itself. Now, there are two types of ways to make money in stocks and commodities and cryptocurrencies. You can either buy real value and be a value investor like Warren Buffett, or you can rely on speculation and hype. Now, real value requires patience. Speculation and hype requires you to be very exact in where you get in and get out. Contrary to what most people think, these markets don't move by themselves. They're moved by conditions and regulations that the government sets in. So if the government says that, hey, we're going to be buying Bitcoin, don't start saying that Bitcoin is useless. If the government is buying Bitcoin, that means the price is going to go up. And of course, you can profit from it, despite the fact that it is useless. Now, I inherently don't believe in cryptocurrencies, and I think that the president is just maybe a puppet for investors who have a lot of cryptocurrencies and they want to profit from it. And I think cryptocurrencies mostly take money from a lot of ordinary investors and put it into the hands of the rich, because the normal person doesn't know when to buy and sell. But I cannot deny that we have a lot of opportunities to actually make money. So the first rule is don't fight the big dogs. And the big dogs right now are promising to back Bitcoin, Solana, and XRP. So let's see how we can profit from this move, despite the fact that we don't believe in crypto. At least I don't. I think it's a scam. Anyway, we can see all of these big moves. Whenever the government puts 0% interest rates and favorable conditions, you get all of these opportunities. So here we can see I allotted Bitcoin to my members. They got their very good profit, and it is starting to show up again. So let's see how we can profit from it. This is the weekly chart. This is the daily chart. The weekly chart is where we like to see the bigger picture of things, and the daily chart is where we get in exactly. Let's zoom in onto the weekly chart. This is the 30-week base. Whenever you see very huge bases like this, like 30 weeks, you just know that it's going to create a very, very big move. And Bitcoin did 100% from there, which was great. So this is base one. It comes and forms base two. So base one and base two are the most trustworthy. As you can see, there's a lot here. And then here you can look to get out. Same thing here. We see a very big base. This time it is about 34 bars. Breaks out to all-time highs. All-time highs is a very good sign. And then we're expecting a base two, but this base two actually has taken very, very long. So it's looking more like a base on base, because we're not expecting such a long consolidation. Again, 14 bars. So we see a very big base here, 14 weeks, and then we are seeing something called a shakeout. If we go into the daily chart, let's see what happens. So there we see that checkout. It's right here on the daily chart. So I thought it was out because it had closed below this support. So it was bouncing off, and I was like, oh, these are good buying points. And then those people will know that, hey, a lot of people are already expecting this support. So they push the price down, but then it recovers very quickly. So when you see it recovering very quickly like this, it's a good time to start paying attention. So what can you do as a retail investor to buy? So once you see these checkouts, you got to wait for a close that's above the 20-day simple moving average. And then you want to wait for a move above that high. So if this bar closes like this, let me say today, for example, then we can put our trigger here at 95,000. And once the price goes above that, you can look to profit. If I want a very tight stop, I'll just put it about 3% below the 20-day simple moving average. Or if you're looking for a very long-term move, you can put it below the low of this bar. So you risk about a 10% move, because if Bitcoin is going to make 70% like it did here, then you could still profit from that. Another way that this could play out is that since the 50-day simple moving average is sloping down, what we normally expect is that stocks won't just go up in a straight line. That is actually very rare. The only reason why you can buy after it has just gone down in a straight line like this is if it's a shakeout. But normally what happens is that stocks will come down and come and form something called a chit here. So this kind of small consolidation here that you're seeing here, this is something that we call a chit. So it will come and form this kind of chit here. And as soon as it kind of escapes this box, that's a very safe time to buy. And we see you had several options. The first option you had was here. You buy here, our stop is about 7%. Second option was here, forms a chit. And then you could have profited from this. It was a 50% move, something like that. 50% from there. All right. So here, you can buy some here, and then you can wait for it to form a chit. That's how you can profit from Bitcoin. If you can't buy Bitcoin outright itself, it's better to buy the 2 times ETF. So we saw Bitcoin went up 50%, but the 2 times ETF went up about 140%. So this thing, if Bitcoin is going up, it will move way faster. So you can use that if you're a more adept investor. The next one is Solana. If we look at the weekly chart, Solana came, formed this big base, and then on that chit, so you see that chit there? Here, you could have gotten in there at the high, and then you could ride it up. It went up about 900%. Here, we are saying, also here, so we see a very, very big base, 30 bars. So as soon as it breaks out, I'm like, this thing is going to go, but I was wrong. It comes back 50% of the time, things will break out, and they'll come back to the entry. So we see a pull back to the entry, which is still a very good sign. And then it's doing a checkout here. So this is the last. It's kind of trying to check out everybody. So we know how checkouts go. We can see the checkout that happened before here. You can see it came, it did a checkout here, and as soon as it crosses above the 20-day, you could have gotten that 50% move up. So here it's forming this bigger checkout as well. I wouldn't buy Solana because the base is very wide and it's not looking good. The best times you want to buy is when it's looking very tight and clean. Like here, it was very smooth action. It wasn't looking very ragged. So here you can see 10% risk. You see it forms that low, forms this chit. That's a good sign. Comes again, forms this chit. So we are looking for this chits. These are very good signs and times to get in. So the best time to get in here was about here at 10 billion, risk 15%, ride it. This one I'll ride until it closes below the 20-day. So get that 300% move. And then there's going to be a base too. And then you could buy again here for another 100% move. And then we have a very big base. So for Solana, what I would do is this one, I wouldn't buy the checkout. I'd wait for it to form a chit. Like we see here, these chits are very good. Wait for it to form a chit around the 20-day exponential moving average because stocks don't just move in a straight line. It will form something like a chit. So let's wait for something like that. XRP is the best candidate. So here we also see a lot of inverted head and shoulders. So we see the first one here, cup and handle. It breaks out. I thought it was going to go out, but it didn't. But of course, if you bought here like me, you'd have held it until it does a 3% move, kind of under the 20-day. I would have sold there. So maybe you got just a 21% move with a 10% risk. So I'm looking for the very big move, so that one I really don't count it. So here it comes again from this inverted cup, this inverted head and shoulders pattern. Some people call it a cup and handle. You can see it's also breaking this trend line, which is very good. But since this side is very deep, I wouldn't just buy it right away. Since it's also not a checkout. Because for a checkout, you want it to cross below the lower low. But here, it hasn't crossed below the previous low. So I can't just trust the way it's just going up. You want to wait for it to form a chit. So you want it to form this chit here. You see this big bar here? Think of it as the equivalent of this bar. And what you're waiting for is you're waiting for it to form this kind of consolidation above the 20-day, right? You see this nice chit. As soon as it forms that and breaks that trend line of the chit, you can just buy. And your stop would be below the chit of the kind of a long-term investor. So a 10% stop there. And then you can profit very well if you catch these moves early. So here, before this thing broke out, of course, I didn't buy it. You can see comes, formed a little bit of a chit here. 7% chit. This was a good time to buy. Just go straight up. So that is something we are looking for. So let's wait and see what happens. I hope we can profit from this. I hope it's not a fake move. That's why we make sure that we don't risk too much of our portfolios. I always advise risk no more than 0.6 to 0.7% of your portfolio. Because if you lose money, you lose 0.7. But if you make money and you make like 10 times your risk back, like here, you risked about 10%, you could have made about 260, so 26 times. So that's 26 times 0.7. I don't even know what that is, but at least it's going to be 15% of your portfolio. So it can help you really grow your money safely. So I hope you found this video valuable. Please hit the like button, subscribe to the channel. May the markets be with you.